Hi there guys, and welcome back to day 2 of our Trader Tips. Now yesterday we looked at our equity curve and how we could work on a structure and process, if you will, for having the ability to add to or reduce our position sizes in the market. That's very much something that relates to trading plan. Today what I want to share with you is something that pertains to our ability to execute our trading plan. Now, trading isn't a business. You often think, well, as a trader, what is my job description? And it really is very simple. It's to execute my trading plan perfectly each and every time. Now, the equity curve is our ability to measure our trading plan, but how do we measure our effectiveness as a trader? And probably one of the most important tools, and I would say that this is probably the most underrated tool and certainly underused tool that's out there for traders, is actually something called journaling. Now, journaling, I have the world's worst handwriting. Journaling is a way for us to be able to self-diagnose. Now, I know that sounds a little bit quirky, and in fact, often when we get into talking about emotions when it comes to trading is an area a lot of people shut down on. They don't like talking about emotions. What we need to understand is that making a decision as a trader, once you're a professional trader, is very simple because there is no emotion. It's just simply a process that you execute. But for many people, particularly if you're just starting out, there is a huge amount of emotion attached to making decisions that involve money. You know, some of the things that you often ask yourself is, well, you know, if I got stopped out of a trade and say my loss was $200, what else could I have used that $200 for? And all of a sudden, there's an emotional weight that starts to build and add pressure to you when it comes to making that decision. And these sorts of things can really make you second guess yourself, which is very dangerous. Remember, your job is simple. It's to execute your plan, not second guess yourself. So when we journal, the sorts of things that I always recommend that people include, and you should really journal every day and then produce a summary at the end of the week, but the sorts of things that you're interested in isolating are how you felt, and let's use the term emotion, when we made the decision. What was going through our mind? How did we feel at that particular time? Were we feeling optimistic about the trade, or perhaps we were bringing baggage from a previous trade? Let's just say you've had a poor run in the market and perhaps you've been stopped out of 2 or 3 of your most recent trades. As a consequence, your feeling toward this trade might be, oh, well, we'll get in and see how it goes, and then, you know, that's not a great way of approaching the trade. You need to see each trade in isolation for its own right. Does it meet your trading plan? And if the answer is yes, it is a trade, irrespective of what's happened in your previous trades. So what we're going to look at doing is isolating the emotion. And one of the key things that we use to identify our emotions, if you want, are what we call language patterns. Now, language patterns are extremely important because they really reflect how our subconscious sees the market. I think, gee, we're getting into some depth here, and we are, because trading is about being able to understand how you make decisions and, more importantly, how you can make them better. If you think about our 2 traders, Trader A and Trader B, Trader A is someone that's going to be totally in control of their emotion. In fact, they won't have any emotion when it comes to making their trading decisions. Whereas Trader B perhaps has got that nagging doubt, perhaps they're bringing baggage from previous trades. When they describe their trades, they use quite negative terms. And these are all things that are reflected in your journaling. Now, I work with a huge number of clients, and when I work with a much smaller group on a more personal basis, if I'm doing one-on-one work with you, for example, I might ask you to submit a few pages of your journal so I can start to understand how you feel about the market or how you're seeing the market. And this area of language patterns is usually the first place I go look. And in here, I can identify whether you're fighting the market. You see, this is one of the biggest mistakes people make. They grapple and fight with the market. It's not their adversary, and it's never going to be your adversary either. It's an inanimate object, the market. It's not you versus the market, it's actually you versus yourself when it comes to trading. And by going through and keeping records of each of your trading decisions on a daily basis and describing them in your own words, how you felt about the decision, why you made the decision that you did, it can isolate areas like this as a problem, which, believe me, are actually, bang, very easy to fix, provided you can identify the problem in the first place. Journaling will certainly help you do that. So what sort of things should you journal? Look, you could put the entry and exit price, that's the obvious stuff, but more importantly, it's the process that you've gone through to make the decision. How did you analyze the chart or the trade? How did you feel about that analysis? Were you feeling really confident? And if you were, terrific. In which case, did you make sure that you took an appropriate position size? Did you bring any baggage from previous trades to this particular one? Were you projecting the negativity that perhaps has come along from 2 or 3 losing trades, or worse, were you really trigger happy because you've just had this dream run in the market and you've been hitting home run after home run after home run, so you'd expect this one to be the same, and maybe you've been a little bit cavalier in the way that you've made your decision. You know, you've suddenly got this innate ability to make great decisions as a trader which are outside of your plan. Journaling also reveals how well you are actually sticking to that trading plan, and I can't emphasize enough in this time that we're sharing now how critical it is for you to stick to your plan always. If you don't stick to your plan, well, you're out of control in the market, and that's a very dangerous place to be because anything can happen and you can't start fixing the typical problems that we see as a trader because there is no process behind it. So these are some of the things to concentrate on. In addition to this, how often should you journal? I think you should journal on every trade. Now that could be daily, or it could be less frequently for those of you that perhaps are position traders. And then of course for you guys out there that are day traders, well, how do you journal when you've got your notebook out and the market's running and you want to watch your screen? Well, very simple. And this is a huge, huge trader tip, and I've used this very successfully with a number of my private coaching clients. For those of you that day trade, why not get a voice recorder, and if you've got an iPhone, for example, you've got memos on there. Just record your analysis real time. And in fact, that kind of journaling is probably the best because it captures the total raw emotion of the words you're using at that point in time. The danger with traditional approaches to journaling, and this is why we don't do this in a traditional way, is that you sanitize what you're saying. You think about it, you intellectualize it, and you think, well, if I write it this way, it sounds better. Getting into the guts of the raw emotion, and voice recording is a terrifically powerful way of doing that, will really help you get your journaling up to, top standard. And let me tell you, the better quality journaling you do, likely the more profitable as a trader you will be. Because your self-diagnosis, your ability to be very honest with yourself and your ability to discharge your trading plan will be absolutely crystal clear. And when I work one-on-one with my clients in some of the private coaching sessions I mentioned, this is such an important area for us to have our first breakthrough. Understanding maybe language patterns or where the emotions coming in, how the client actually perceives the market or the trade that they're taking. Put those things together and what you start to have is a very, very clear picture as to if things are going very well, what they're doing well, or if there's a problem in their trading, what's not going so well, and more importantly, how can we fix it? So take this away and put it into practice. If you haven't got a journal, go buy one today. 1 day per page diary is a great way of starting. Put down how your trading has been going or how you feel about it. And for those of you that are day traders, start recording your analysis. Listen to how you describe the market, and you'll probably already have a very clear signal as to perhaps where you're not getting the consistency that you like. Trader A journals every day, and then they summarize it at the end of each week and the end of each month to provide a terrifically comprehensive resource. And if you want to be successful in markets, I cannot recommend enough the importance of journaling. I hope you found this session useful. Put it into practice, because not only should this make you sense, but it will make you a lot of dollars when you actually mesh everything together and include it as part of your day-to-day trading activity. So as I say, I hope you found that useful, and I'll look forward to seeing you in the next session.